gentlemen, hope you had a good weekend. And let's get diving in here. It is Monday, October 11th. So I hope you all had a good weekend. I hope y'all are ready to work here. So taking a look at the futures, a little bit sloppy. S&P is down about 0.25%. The Q-tips here spanked just a little bit more, down about 0.5%. And the Dow Jones Industrial is flat. That's probably your best looking index at this point. And your small caps are flat here as well. So if you just kind of look at the S&P here, I'm sure a lot of you made the observation over the last few days, we do have a daily squeeze. Keep in mind, this daily squeeze couldn't be any different than the daily squeeze we had over here. Over here, you're above the 21. Back then, we had positively stacked EMAs. There was bullish momentum. There was a positive histogram. So there's a daily squeeze of the high probability of pushing towards the upside. There's a daily squeeze of the high probability of pushing towards the upside. There's a daily squeeze, same structure, where this daily squeeze, histogram is still negative, no stacked EMAs. Everything's a bit neutral to bearish here at best, and you're under the 21. So we do have a brand new daily squeeze, not one I'm necessarily looking to jump into to the upside. So my thought process here is, and I think the thought process of a lot of folks over, it's simpler right now as far as the moderators go. Until this market starts to string together 2 to 3 closes back above the 21, you want to be a little bit cautious to the upside. Is the path of least resistance probably continues to be to the downside. And these are pretty much your ebbs and flows here. It's the same thing we try to work with to the upside. It's just to the downside, where you're going to push from the 21 down to about 2 to 3, -2 to -3 ATR. Then you bounce back towards the 21. You get your next flush. You get your next bounce. So you got the bounce last week. We failed to get those 2 to 3 closes back above the 21. So leads me to believe, unless we can get that going here this week, could see the market head right back towards that downside. The VIX continues to hang out here, and then the Qs, same structure as the S&P. If anything, a little bit more bearish as far as the momentum goes. You short it to 21, you take profit at -2 to -3. If you want, you can play the bounce back to the upside. So we played the bounce last week, but I do think we could continue to sink lower here. So there's good looking long setups out there. AON is a great setup. I think Palo Alto is a great setup. Match.com is pretty solid. Home Depot and Lowe's here. Pretty solid stuff. And then you've got, the Netflixes, which is super extended at this point. And then you've got the Teslas of the world. So if you're looking to get long, you're not going to have a hard time, at least I don't think, finding good-looking setups here. Just the number one thing I want to keep pounding the table on is that these daily squeezes, these bullish setups here, that all works really good in an uptrend. It all doesn't really work all that well in a downtrend. So if you're going to pull the trigger on, say, Match.com here, I think you at least got to take into consideration, hey, this might be a good-looking setup, but if the market goes down another 4 or 5% this month, this is probably going to get spanked with it. So I don't think it's the market where you're looking for home runs to the upside, so to say. So in terms of open positions on my end, with all that being said, we did get profits taken. So we took profits, I think, last Thursday on our Tesla put credit spread we had in the Mastery. And then I had a few other spreads as well. So nothing going on there on Tesla at the moment. And we have a call credit spread on the IWM. We got short strikes up there at 228. And then we have got, I think the SPX here, we have an in-the-money call credit spread on the SPX. So basically what we're doing here is, pull this up on the chain. So typically with a call credit spread, you're going to go out the money. You're looking to take advantage of basically these options that are worth nothing but premium. Instead here, to kind of put the risk reward in our favor, we're selling those calls in the money at 4,300. We went $10 wide, about the 43.10 as protection. But the idea here is you're going to get some fat premium. So I think we got filled at 765. And I'll show you the numbers here on my position size. I got 25 contracts. Now, keep in mind, if we were to sell calls up here at, say, 4,500, I don't really need the market to roll over. If I sell, 4,500 might be a bit extreme, but for the sake of conversation, those out the money spreads, they're awesome. If I sell some calls up here, I don't really care what the market does, as long as it doesn't go back above 4,500. So the market could roll over and I'll make a profit. It could just kind of slowly droop lower. We're still bringing home some premium. The market could even rally. As long as you're under 4,500, you're in good shape. So those are really high probability trades. Your risk reward is going to be a reflection of the probabilities drastically stacked in your favor. So instead here, you sell the 4,300 calls. Now, obviously, for this trade to work, as we head towards the end of the month, you want to see the SPX below 4,300, basically breaking those previous lows. So you do need a directional move here, but that's where you get a pretty solid risk reward. So with my 25 contracts, I'm risking about, I'll round up, risking like $6,000 to make 19,000. Realistically, though, if the market rallies back up here to like 4,500, I'm probably taking a $3,000 or so loss. So the market rips a good 100 plus points. Probably going to lose about $3,000 come end of October, early November if we're actually under 4,300. Max potential profit of 19,000. So we did this in the mastery, risking 3%. If the trade doesn't work and the market rallies, we probably lose 1.5% of our account. If the old girl does flush here and gets nasty, we stand to grow the account by 7-8%, that kind of thing. And where I would be more looking to do, bigger positions, out the money spreads, is once we're in, call it, a certified downtrend, where really we've gotten like 2 weeks of selling pressure here. And it's tough for me to call a weekly chart that continues to hold support at the 21 a downtrend. So if you want to talk about the last, 3 or so weeks here, I suppose you could call it a downtrend. But from a bigger picture point of view, where this all starts to get pretty nasty, I think, is if you lose the 21 EMA as support here. Then I think everything really starts to grind to the downside. That's when I think you have a downtrend. At the moment, this is more potentially just kind of transition to what could be total chop, or slowly but surely the market continues to head lower. So that's what I'm looking at there, y'all. And really, this is going to be a relatively, I say this, what the market has in mind. But on my end, shaping up here to be a pretty inactive week. I'm not really looking to get long anything. So I think you had the window of opportunity last week. Remember, once we get extended, there is a growing probability you're going to get a strong bounce back to the 21 EMA. So that is exactly what you got here last week with your S&P, with your Qs. Google made a strong bounce. Amazon made a strong bounce. That window of opportunity was there last week. But once you get back to the 21, I think you're looking for the next leg to the downside there. So not looking to put on any long positions, just kind of looking to sit back this week, take it easy, see where the market heads from here, preferably to the downside. But that's what I'm rocking with here, y'all. What I'm most interested to see towards the end of the week is, do we continue to hold weekly support? If we just can't crack below the weekly 21, I don't quite think it means the market rips back towards all-time highs. I think it might just be more of the same. Basically a total chop fest here. And as we tend to get from the chop fest, if you take a peek down here, you're going into a new weekly squeeze. So certainly could be just a big old nasty consolidation. Let's check out the Qs here. They're just kind of smooching the weekly 21. But that's what I got for y'all here. To be honest, I didn't even run the scans this morning. So if you've been a part of focus trades, you're a simpler, I love my squeezes. I don't really feel like the kind of market right now where that's to my benefit, is to spend time looking for things like Match.com, looking for things like Home Depot. They might work. Reality is the higher probability trade here, if in fact the market does continue to head lower, is going to be a short on the index. At the end of the day, I think for a lot of us, we're always playing the index. So if you think back to August, so back in August, in our mastery, we're catching that move on Facebook. Had nothing to do with Facebook, though. We caught this move here on Apple. Nothing to do with Apple. We caught a move on NOW. We caught a move in real estate, a move in XLC. All good looking daily squeezes, all good trades. But you're really trading the market's trend. So that Facebook daily squeeze, the Apple daily squeeze, the whatever it might have been back then, it worked really well because you had the same bullish structure to your market. We don't have that structure anymore. So to spend a bunch of time here looking for good-looking daily squeezes like this, it might work, but you don't have the market behind you right now. So it's not as high probability of a game as it was in March, April, May, June, July, August. But if y'all have got any charts you want to take a look at here, throw them at me. But that's what I got for you. I really think that's all you need, truthfully. Until we get 2 to 3 closes back above the 21, I think you look for more downside and just understand what comes with a market where the path of least resistance is to the downside. What comes with that is easy short entries after these bounces back to the 21. What also comes with that potentially is headaches where you jump into something like a CVS. That's a good looking daily squeeze. And then it gets caught up with the overall market. So a few things for y'all to keep in mind here. And then we got earnings coming up. So October shall not be a dull one. Netflix just total beast mode, though. I thought we got a good move getting out here. And then Netflix said, we got to keep it going. But in terms of Tesla, I do like the daily squeeze. So if there's anything I'm looking to play here long, it might be a Tesla. You do have earnings coming up next week, though. It's a good-looking daily squeeze. It's a great-looking, I think, weekly squeeze. So, if anything, keep an eye on Tesla there. Would like a bit of a dip. Yeah, good morning, Lucas. So, Lucas, are you trying to get approved for spreads on Thinkorswim by any chance? If you're trying to get approved for spreads on Thinkorswim, I definitely got some advice for you. Unfortunately, the advice is, I don't know if I should. Yeah, I'll say it. You got to lie through your teeth, man. Unfortunately, it's just a reality. Anybody who gets approved for spreads, it's like you got to have X amount of years. You got to have a net worth of, ABC. That's the only way I've seen it work. Unless you realistically have been trading spreads for 5 to 10 years and you got a net liquid net worth of ABC, you basically got to BS it. Not the advice I want to give, but it's unfortunately that's how it goes. Lucas, it's almost like they want you to be born with all kinds of options trading experience. So from that perspective, a new trader would never have a chance. I would also suggest check out Tastyworks. Check out Tastyworks. I haven't heard of anybody having any issues getting approved there. Nor do I think you have to fudge the numbers. Yeah, Jason, I would definitely. Yeah, see, it's been so long. I can't remember if there was a minimum. What I can remember, though, last time I opened up a Tastyworks account, I don't believe there was any minimum. Don't quote me on that, though. Yeah, exactly. The secret ingredient is crime. Just got to embellish a little bit. Eric Johnson, good question on the Trin. Not something I tend to look at. And I don't really have a good reason as to why or why not. Though if you were looking to learn more about Trin, I do believe that John's got a whole chapter on that in his book, Mastering the Trade. Not something I pay too much attention to, though. All right, Sophie. Let's check out Sophie. SMFI. We check the weekly chart here. So you're in this big consolidation. The one thing I'm struggling to see here is really any kind of momentum that could get this bad boy going either which way. So as a kind of a comparison, kind of easy to see Netflix getting out of that weekly squeeze when the histogram starts to get positive. You got stacked DMAs, green 10x bars. So you have your consolidation here, but then you got some momentum at your back. Where with the Sophie, you certainly got the consolidation. The EMAs aren't stacked positively. They're not stacked negatively either. So that's kind of neutral. The 10x bars aren't bullish or bearish on the weekly chart. They're neutral. If you take a look at a daily chart, so there's nothing bearish about it from a momentum point of view. There's also nothing crazy bullish about it. So my only piece of advice with something like that is, where trading this could be difficult is if you give it 3 to 5 days till expiration. You need some momentum to get the party going here. Where instead, if you could give it, say, 30 plus days till expiration, then I think you're giving it a fighting chance to get something going there. Yeah, so it's not bearish at all. Not bearish at all. I think if you're going to trade it, though, give it plenty of time. Compare this to, say, Palo Alto. Green 10x bars on basically every time frame, stacked DMAs. If you look at your 4-hour chart, you got bullish momentum. So give Sophie plenty of time until you start to pick up some momentum like that. All right, next up is PayPal. I got to keep an eye on the clock here too. So PayPal, to me, does the weekly chart change my opinion? So I'd be careful shorting it above the weekly 50. I'd also be careful shorting it. Yeah. To be honest, I don't really have an opinion for you here on PayPal. It's not something I would get long. Where I basically tend to get long pretty much just one setup, which is that daily squeeze in an uptrend above 21, positive histogram, stacked DMAs. So it does look more of like a reflection of the market, where you bounce to the 21, you flush, you bounce to the 21. So I would say, path of least resistance can certainly continue to be to the downside. Then it's a question of, does your weekly 50 hold up as support? The weekly squeeze, you got no stacked DMAs. Quite frankly, it's probably going to follow the market, that's why I really think we want to be careful right now. And I got to take my own advice for sure. I think we got to be careful right now about putting too much focus into the individual stocks. The last few weeks here, it's just a representation of the market. It's probably going to continue to do that until the market turns around. Apple's chart, that's just a reflection of the QQQ, as is Amazon. So we could sit here and look for setups and break down Amazon, break down Apple. I think the major thing we all want to pay attention to right now is the market itself. Here's what I would guess. My guess would be once the market finally puts in a bottom, if we finally get some traction going towards the upside, I bet you at that point, the powers that be, they probably start buying the crap out of a PayPal. Right? They probably start buying Facebook left and right. They're probably going to start buying Apple like there's no tomorrow. And I say all this to say, if the market itself continues to grind lower, the vast majority of things we're going to look at probably continue to do the same. And even if you think you find something super bullish, you're still running a bit of a risk. But with that being said, where PayPal is going to start to really get accumulated, and where, a Chipotle starts getting picked back up, and all these names we focus on, got to happen here in the market first. I think that's important to, to keep at the forefront of our focus right now. Hey, good morning, John. John says, I missed the first part. Good question, John. So, because I got a few short positions here, selfishly, what I would love to see is the market to just continue to trade lower. But you're asking a good question here. Actually, John, I love your question because I think, probably myself included, a lot of times as traders, we lean way too heavily into, we're going higher, or we lean way too heavily into we're going lower. And quite frankly, that's just a result of the market we've lived through for the last 2 years. You haven't had too much sideways. But to John's point here, that third alternative where we don't explode, we don't roll over and break to new lows, instead we just chop ourselves silly here, certainly is possible. Certainly is possible. So, John, I would say to get a better sense of, is this just going to be a chop fest here? Probably do still want to see the market get back above the 21. But then what can really help us here is those lower time frames. Mainly looking for squeezes on those lower time frames. And John, I think we're going to have a few perfect ones here. So heading into the open, we have a 2-hour. Yeah, this is perfect. There's a 1-hour squeeze. There's a 30-minute. So we'll start here at the 30-minute. So to John's point, you look at a daily chart. So we bounced up to the 21, and sure, right? You get your flush. You get your flush. What's to say we don't just sit here and chop? What I want to do at this point is kind of dial it down a little bit underneath the surface and see if we're building up any momentum and energy anywhere in the form of a squeeze. Then I'm trying to get a sense of which way these squeezes are going to fire. So, John, if we take what we typically focus on as far as structure, and we're judging a squeeze together in the options room, this one's a little bit iffy here. Not the kind of squeeze I'm looking to get long. Red 10x bars, no stacked DMAs. So we're looking to see if these begin to fire short. That 30-minute squeeze fires short. That triggers that 1-hour squeeze. That triggers that 2-hour squeeze. Next thing you know, under the surface, you're releasing enough energy to the downside to give you that continued projection off the 21. If instead this 30-minute squeeze just squeezes all morning, all afternoon, all day tomorrow, kind of like this, guess what? We ain't going anywhere. So this is a great question, John. That's an example of exactly what I'm talking about. As your daily charts begin to get choppy, and it's tough to kind of digest what the heck are we working with here, look for some squeezes on a lower time frame. You can see this squeeze obviously fires short, and that kind of started that push off the 21. So good question, John. I think we could continue to trade lower, but the key here, because we are just in a chop fest, we're in a daily squeeze, we got to dial it down a bit. So we got a 15-minute, a 30-minute, a 60-minute, and a 2-hour squeeze here on the S&P futures. We're probably going to get our next directional move here once those start to fire one after one. We're not getting a damn thing if they just continue to squeeze. Awesome question. Tim, great question. Do I ever look at the Australian dollar, JPY? Personally, I do not. However, Tim, I do know a few folks over here at Simpler. Those are things that they certainly do look at. And Tim, you probably already have. But someone who I think is, the equities market, the futures market, commodities, etc. You should check out Raggy Horner's charts for coffees. She definitely covers like a lot of, in a really good fashion too. Hey, Miss Angela, call credit spread. I like it. I like it, Miss Angela. I basically got October 29th expiration. So what I would imagine here with IWM is if the market just continues, we're just completely range bound here, weekly chart. If the market does continue to grind lower for October, I think this throws in the topple as well. So as you know, Angela, the benefit there of that call credit spread is you can make out just fine here with either or. Be it is a total chop fest. In that case, you're trying to collect some premium. If we do get the flush here, I think you'd be in great shape. So personally, I like the position. Thoughts on Tesla and Nvidia? What's my current gym split? But I like that position, Ange. It does. So we'll start with Nvidia here. Same opinion of Nvidia that I have of the overall market. And the same thing applies to just the semiconductors in general. Until we're getting 2 to 3 closes back away, I think you're looking to shoot the 21. Histogram is not positive. No stacked EMAs. Red 10x bars. Let's look at the momentum. Look at the quality of the momentum from a daily chart down to a 15-minute. Pretty nasty stuff here. So Netflix is Nvidia rather. And again, it's not an Nvidia thing. It's a reflection here of the market. The market is making a series of flushes away from the 21 and bouncing back to it. So I think you need 2 to 3 closes here for Nvidia to start to stabilize a bit. Otherwise, it just probably follows the S&P. And, the semis in general probably continue to do the same thing. As for Tesla, I do like the daily squeeze. So you got earnings coming up here next week. High compression 4-hour squeeze. 2-hour squeeze. It's setting up for something. You get squeezes like everywhere. So it's gearing up, it's fixing to do something here. I would tend to think it's a push towards the upside, just based on this really good daily structure here. In terms of what do I do with it here, I'll have to kind of take a look at where we open. I do like Tesla, though. So with the credit spreads, it's kind of like, we're getting filled last week. The buyer spreads back at 70% of max profit, but the job's not done, so to say. We're going to catch that daily squeeze. Well, the daily squeeze didn't fire yet. So we'll take the paycheck, but we're still looking to take advantage of the big push that potentially could come out of the dailies. So we're still going to keep an eye on that one there. Eric Johnson, current gym split. Basically just like a 1 rep max on bench and deadlift 5 times a week. Like nothing efficient at all, which I got to change soon. Trent, CEI. Trent, these things usually aren't in my wheelhouse. However, I'd like an entry back here at the 21 on any stock versus chasing it up here once it's already made the big push. So from that perspective, it's back at the buy zone. Right, I hate to see anybody getting long up here. That's like, 2, 3, 5, 10 average true range moves above the 21. You've got bullish momentum. So again, these high flyers, the cheaper stocks, not really my wheelhouse, but we can still take some of the same principles that I would apply to a Netflix. I want to take entries at the 21. I need that bullish momentum. Ideally a daily squeeze, which you don't have here. But you can go hunting for squeezes elsewhere. I think you'll have a 1 hour here. Do we get a 30? Yeah, 30-minute squeeze. So you're looking for squeezes at the daily 21 EMA. You got that working in your favor there. Hey, good morning, Warwick. Big Danny. Let's take a look at Ulta. The legendary Danny Roach, my man. So my only advice here with Ulta, you got a good trend. You have a good structure, right? The daily squeeze at the 21. The one thing that's missing, which I think is super important in this market, because the indexes aren't giving it to you, is bullish momentum. That's why I think a Netflix there can buck the trend. Green 10x bars everywhere, positive histogram. You got to be packing that kind of punch here, I think, to go against the overall market. So while Ulta has a good structure, CVS also had a good structure. Notice how we were lacking bullish momentum, and the market's not giving it to you. Notice how Broadcom here, and now it's bouncing back, but no bullish momentum. So really, really liable to fall victim to the market. That's my major observation here with Ulta, because I was looking at it over the weekend. Good looking structure, got to be looking for a bit more momentum. So I'd love to see stacked EMAs. I'd love to see the daily histogram turn positive. But if we crank it down to a 15-minute, just to get a bigger view here, Danny, it's far from bearish. It's actually the furthest thing from bearish here. It's just a little bit neutral on those bigger time frames. All that means is it might need a little bit more time to develop. But if I was going to take a trade here, I'd look to give it plenty of time till expiration, just in case it needs to continue to chop before making that push. Whereas something like a Palo Alto, all those green 10x bars, maybe I'd be willing to go a little bit shorter till expiration. So good, great trend, great structure. Seeing a little bit of Momo here. Polito asks, instead of individual stocks, I just focus on the indexes? Pretty much, yeah, pretty much. Like 95% focus on the indexes, 5%, what's Tesla doing? But pretty much, yeah. And like I showed y'all, reason being is that Facebook trade back here worked really well because the market was moving the same direction. That Apple trade works really well because the market's moving the same direction. It's not so much finding that daily squeeze and getting long like you had here in Microsoft. It's finding that daily squeeze at the same time the market, in this instance in Microsoft, the QQQ, is setting up in a bullish daily squeeze. So often our profitable trades on the individual stocks, we tend to fail to realize it has everything to do with the market. Because a lot of times you come looking for that same exact daily squeeze that treated you really well a few weeks ago. And now with a nastier structure to the market, suddenly that Microsoft daily squeeze, you can take the same entry, same exit. That one worked like a charm because the QQQ is in the same exact setup. That had nothing to do with Microsoft. Our trades in Facebook and Apple had nothing to do with Facebook and Apple. It was a QQQ thing. Same reason over here, where you get long that Microsoft daily squeeze, you get long that Apple daily squeeze, you get long that Facebook daily squeeze, and they all bite the dust. It's got nothing to do with those stocks individually. Everything to do with this bad boy. So y'all, that is my biggest advice here. Focus mainly on the indexes. And I got to jump into the options room here, but that's my advice. Focus on the indexes. Bullish setups work really well on individual stocks when the market is just as bullish. A lot of that gets thrown out the window when the market loses structure and trend. And unfortunately, it can have you thinking, squeezes suck. Well, squeezes are great if you trade them in the direction of the overall market. So no, I didn't get to everyone's questions here today. We'll start a little bit earlier on Wednesday, leave a bit more time. But I hope I've left y'all with a few things to focus on here. And my opinion is until we get 2 to 3 closes back above the 21, could be looking at more downside. So I wish y'all all the best of luck today. Be disciplined, and I look forward to seeing you on Wednesday morning. For those of you in the options room, I'll catch you in a few minutes. Have a good day, y'all. I appreciate your time.